Today I just have a quick video on a conversation I got to have with an investment manager from South America who manages about a few $100 million in funds. And I got to hear his take on how he handles growth stocks. So I'll be talking about what he mentioned today, the 3 pillars that he looks for in his firm, and the implications for growth stocks aside from more mature and established players. So the first of which is pricing power, where he looks at gross margin, competitive advantages, competitive landscape, the true importance of pricing power, not just what it means itself, although it is very important for present day, but even more so the implications it has for the future of the business and the characteristics a business with pricing power truly has that make it likely to be a long-term winner. So when I look at Palantir, does it have pricing power? I do believe it does. Great gross margins in terms of a software business, competitive advantages in terms of bringing lots of products and processes into one foundational platform. And in terms of the competitive landscape, it's pretty fractured. There are competitors that do portions of what Palantir does, but Palantir is going for a much larger vision. So while there are other players in the government space, while there are certainly other players in the commercial space, when I look at the competitive landscape, I do think Palantir can succeed in its current strategy going forward. And now the second pillar he talked about was growth. Looking at the total addressable market, CapEx cycle, nascency, the sector itself, marginal return on investment. So we look at the TAM for Palantir at about $120 billion. Is that an attractive TAM where the company currently sits? I would say yes, for the fact that Palantir will probably be doing $2 billion in annualized revenue in a couple quarters, and what they're looking at is actually a 60x in their TAM potentially, and I even think their TAM is understating its total possibility in the long run. And in terms of the CapEx cycle, I think that is very important for when you're looking at growth, and Palantir's CapEx, if you actually look at the figures, has been pretty steady and flat and predictable. Of course, it ties back to the stock-based compensation that everyone is so tied up about. And yes, it is a problem, and you can forecast it all you want, but we really need to see going forward how it's going to have an impact. And in terms of growth for the sector, I mean, software is huge. Enterprise AI and SaaS is going to be even bigger in the future. Converging technologies are going to enable that great growth. I have nothing but great things to say about the sector. Of course, it all comes back to what are you going to pay for that growth? Is it worth what you are paying for? But in terms of the growth, I do see both growth and pricing power as strong for Palantir. And then on to culture, we have ideas such as governance ownership, leverage, how leveraged is the company, what sort of execution have we seen to date, ESG, if you want to include that in financial statements, what are the financial statements looking like, mechanics, history going forward, everything like that. So on the governance and ownership, I think Palantir takes a bit of a hit, depending on how you look at it, depending on your view as an owner of the company, as a shareholder, the Class F shares for all of the co-founders in which they get complete voting power. So I think Palantir takes a bit of a hit there unless you have full and utter confidence in the management team completely and think there is 100% possibility that they are the right people no matter what happens in the future to be leading this business and will not get sidetracked, have conflicts of interest, anything like that. So I tend to lean towards that, but potentially the governance structure could be an issue. It's something you have to consider, certainly. And then in terms of leveraging the business, is this a company that has a culture of leverage? No, not at all. Palantir's culture is actually all about reducing that sort of leverage. The leverage comes in the product with its network effects, but they are not leveraging the company. They don't have any debt. Their credit keeps going up and up, so their credit that they could actually bring in if they wanted to go into debt is increasing, but the leverage is marginal. And then in terms of historical execution, we've seen this company really from the ground up in the last 18 years go from just developing a product for 3 years or so and then start to break into the government side and develop this commercial product, spin it off the side. They had some failures along the way with Palantir Finance, Palantir Metropolis. They finally got Foundry going, and that's been extraordinarily successful. And the pace of growth there has surpassed the government business, which is great to see. So I think the execution is there. What remains to be seen is how Palantir can execute on a growing base of revenue. So I think when we talk about ESG, it's of course much more on the social instead of the environmental, and we hit on the governance a bit, But in terms of social, it really comes down to the ethics and all of that. I'm going to have a video coming out on Palantir's ethics in the future because I did some research there. But it really comes down to what you think about Palantir's mission. Do you think it is a noble one? Do you think they're moving in the right direction? Regardless of your political views, you can still have an independent perspective on Palantir and what it is doing. But sure, that can definitely lead into your view of the company and your investments. If you do choose to take an ESG lens, I know lots of investors think it is virtue signaling or whatever it may be. And I agree that it's probably not the best representation of a company's impact in terms of positive impact, but I think there are definitely some important characteristics to ESG, and retail investors can feel free to lean into that or not. And then on the financial statements, I mean, if we just hit on the balance sheet, as I said, Palantir has zero debt, growing cash. They're issuing stock-based compensation, which is keeping their financial statements very strong because those are non-cash expenses. But I think Palantir, from a financial point of view, is very strong. So if you look at these three, pricing power, growth, culture, I don't see any tremendous red flags. This guy I was speaking with also said to have strong opinions loosely held. So when I look at Palantir, I'm not blind when I make an investment and continue to add to an investment. My strong opinion on Palantir is it will be a winner in the next 5 years because of its growth. I think its growth is going to accelerate and exceed that which Wall Street expects, and that will return significant investments along the way. So then in terms of specifically how do you address this sort of stuff with growth stocks, you look into the future. You can't be looking in the past, you have to look into the future. Now that does pose risk, but it is what you have to do, and you have to look down the road. What is the earnings power truly going to be? Make projections like that. And of course, you have to look at the short term to be able to develop a long-term thesis, to be able to look along the way. These are the building blocks that are currently developing. But don't overly focus on quarter-over-quarter information, anything like that. You have to observe all numbers and figures and statistics and exclude the ones that are just noise, focus in on the ones that are signal, which is potentially year-over-year figures, what's happening with the core business, the products, everything like that. So it really comes down to time value of money, what are your opportunity costs, other investments ranked in terms of conviction, everything like that. So when I look at Palantir, I think it has great pricing power. I think that's a strength for the company. Growth is something that really needs to continue to play out. If we see accelerating growth, I really think that is the best possible outcome for Palantir. And in terms of culture, there are gives and takes. Live with what Palantir has structured the company as. If you are going to be making an investment, doesn't mean you have to invest in Palantir. No one's telling you have to, but I would tell you to be fully aware of the dynamics of the company before making an investment. So that's where I'll leave this video. Hopefully it was helpful to get a perspective from someone that's managing hundreds of millions of dollars and what they look at for growth companies especially. Leave a like if you found it insightful. Until next time.